Welcome everyone to the Division of Local Services webinar relative to the balance sheet checklist. My name is Jennifer McAllister and I support training initiatives here at DLS. Before we get started, I want to remind participants that this webinar will be recorded and posted on the DLS website in the YouTube channel for future reference. We will also share the PowerPoint slides along with any referenced links. If you have questions, you can submit them using the question and answer function on the bottom menu, and they will be answered. Are we going to answer them at the end or as we go?
We'll probably do it as we go, as we see them pop up.
Okay,
once we get a little spot,
Yeah.
we can do it. We'll jump in.
All right. So today's presentation will be led by BOA supervisors, Jared Curtis, Tom Guilfoyle, and Andrew Nelson. And Tom will kick us off.
Great. Thanks, Jennifer. Good afternoon, everyone. Today we're going to discuss the balance sheet checklist and go through the questions, and we'll talk about some of the reasons why we're asking for them and what we're looking for. So go ahead, Jared. Next slide. Excellent. So again, we're going to talk about the balance sheet checklist, and some of these questions contribute. The purpose of the checklist is to gather some information for some supplemental information to the balance sheet submission that's being submitted to DLS, and a big portion of it is to help us put together a proof of free cash to see where we stand in relation to calculating your free cash and how much free cash we can identify. So let's jump into the checklist. So the first four questions or so are pretty basic. Basically, first question: are there any unrecorded property tax refunds? So we're looking for you to identify to us any refunds that have not been recorded in your system that you owe back to taxpayers, because that would be a reduction to free cash. When we're certifying free cash, we look to certify the most conservative number possible. And we look at it from a 10,000-foot view of if the community were to shut down on just June 30th, what would be left? What would be remaining? What monies would be due people? And then what funds would be remaining? So unrecorded property tax refunds would be a reduction to free cash. So if you put yes, we'll expect to see the number, and we will use that number and reduce your free cash. Second question: have you accrued any property tax revenue? So certain communities have continued to do a 60-day accrual at year end. We need that number so that when we look at different information on the balance sheet, your receivables compared to your overlay and your deferred revenue, if you've accrued property taxes, we need that number to make sure that equation stays in balance. So that's another number that we use outside that has no reduction to your free cash or anything like that, but that's accrued revenue that you're taking in your free cash calculation, and we need that for a side calculation that we do. Do due tos and due froms offset? Not everyone uses due tos and due froms, so if you don't use them, just leave it as yes. But if that you press that radio button that's a no, first off, you shouldn't be submitting your balance sheet because they should balance before you submit. If it is a no, you will definitely get follow-up questions as to why, what's off, and we will want to look at that variance and find out what is going on. Have all payables and encumbrances been recorded, including accrued payroll? This is pretty self-explanatory. It should always be a yes. You should always be recording, making all of your entries and recording your payables and encumbrances. Very rare we see a no there. And again, if it is no, you shouldn't be submitting your balance sheet at this time. You need to get those entries recorded prior to submission. Question 5, have all free cash and retained earning votes been recorded? Very same as question 4. You should be, every time a free cash is appropriated or retained earnings appropriated at town meeting, those votes should be recorded. Those are available funds, and they need to be recorded and taken out of fund balance. So if you have not made those entries, again, don't submit your balance sheet. Make sure they're recorded prior to submitting. Next slide, Jared. Question 6 looks at your local estimated receipts. So we're looking to see what you've estimated from the prior year when you did the recap sheet, and looking to verify that with the current year actuals that have come in. So on the estimated receipt line, first line there on part 6, go back to your prior year tax rate. So in this instance, it's the fiscal 25 tax rate. Look at your total on page 3 of your estimates, and you put that number in there. The actual number will come from your current year tax rate, so fiscal 26, page 3 in the actual column. So as you can see in this example, this community was conservative in their estimate of only estimating 11,152,000, but the actual revenues received were 14,039. So that generated 2.9 million of excess revenue over what they estimated. So that 2.9 goes into free cash. That's one of your building blocks of free cash. You were conservative in your estimates. You got a good, strong showing in your actuals. So you generated almost 3 million, 2.9 million of excess receipts that flows to undesignated fund balance. Question 7 is asking about any other revenues that the community received that were not included on question 6, which means page 3 of the recap. So if you got a old grant reimbursement, I don't know if you guys want to give me some other examples. Tax title principal is not included here, but tax title interest and penalties are. Go ahead.
Go ahead. Any sort of state monies you were given that you weren't expecting. So if that is general fund money that goes right to the general fund. So before we had the special legislation a few years back, your opioid money was coming in and going to free cash. If you get something like that you weren't expecting to get, that you did not put in your budget from the state or for anywhere else, that's what would go here.
Thanks, Andrew. And again, on tax, so we see a lot of people report tax title receivables here. We do not want to see that. It would be the interest and penalties received on tax title, which would be allowed. Moving on to question 8, we're looking at your cherry sheet estimated receipts from prior year to what you actually received. So again, that first line in question 8, that number is going to come directly from your we'll look at your prior year recap sheet and look at your cherry sheet estimated receipts and back out the cherry sheet offsets, which would be the public libraries and stuff like that. We back that number out, and then we look for you to go to your revenue statement at the end of the year and see what you actually received for your fiscal 25 cherry sheet revenues, and you put that in for the actual number. In this case, again, the cherry sheet revenue came in higher than what was estimated in the prior year because we know that's an estimate. So 30,868 of cherry sheet revenue went into free cash as well. Question 9, we're looking at other financing sources and uses. So any items that are coming in or going out of the general fund. So we look for the description under revenue type. Tell us what kind of revenues are coming in as a source. The budgeted amount. When we say budgeted, we mean the voted amount, what gets voted on. All right. So all of these should be voted. And then you'll put in what you actually for this source. Okay. So the first example was in enterprise fund indirect costs. What was voted and appeared on the A2 was 2,244,725, but the actual transfer was 2,144,000. Building and capital stabilization funds, same thing. The amount was budgeted and voted, so it goes on this form, and then the actual amount of the transfer goes in the actual column. Any variance in that will affect what goes to undesignated fund balance. So in this case, when we totaled all those up, we had 253,057 of money that went to fund balance. Okay, actual amounts in there greater than what was budgeted.
Tom, can I jump in here for a second?
Please do.
Question. We had a question here. They were asking it about section 7. They said closed out insurance proceeds or grants. Would that go in question 7? That money would go in most likely in question 9.
Yes.
If it was something like that, you were closing out old grants or something, question 9 is probably the better place for that. If you put it on 7, we could probably get you there, no problem. But the more appropriate place would be section 9. I wanted to wait till Tom finished section 9 before I jumped in on that.
Okay, we good? Let's go to the next slide, please, Jared. So question 10, we're asking about other financing uses and transfers to the general fund. Again, we're talking general fund uses, money that's being used from the general fund. Again, budgeted amounts mean voted amounts. Everything in this section should be voted because you can't spend money without an appropriation. So whenever you put something in section 10, you should have an amount in the budgeted, quote, voted column because you cannot spend money without appropriation. In this case, we have a 0 variance because everything matched up. What was voted was the actual amount transferred, leaving us, with a neutral position for the flow to free cash. Question 11, one of our favorites that tends to get overlooked. Oh, sure, Jared, go ahead.
Just something else. There's rare occasions where we do see that voted or budgeted amount being 0. In the instance where there was a mistake that was made and funds were posted to the general fund that should have been posted to a grant or a special revenue fund. So in that particular case, you'd be, moving the money back out of the general fund to the proper special revenue fund.
Thanks, Jared.
The only time you'd really see a variance here is if you vote and the variance would be the budgeted amount is higher than the actual amount. You budgeted something, you voted a certain amount, and you didn't transfer the full amount for whatever reason. That may happen, but 99% of the time, this is going to be the budgeted amount and the actual amount should be the same thing. Because as Tom said, you can't transfer without appropriation.
Thank you, gentlemen. Question 11. A lot of times when this form is filled out, this ends up blank. I think it's because of the way it's laid out on the checklist, but very important question. We're asking you for all of your unencumbered, unexpended appropriation balances. So to get this number, you want to look at your year-to-date expenditure report, budget to actual expenditure report. We want to look at all of the positive amounts that have not been appropriated and spent, right? That were appropriated, I should say, were appropriated, but not spent in the budget. Okay, all of the positive amounts. You shouldn't be netting numbers. So if one line was a negative and the next line was positive, but overall it was positive, we only want the positive amount. We don't want you decreasing it for anything that's in there. A common item that gets included in this that will throw it off is your snow and ice deficit. All right, if you've reduced your snow and ice deficit in this number, it's going to be low, and it's not going to help your proof out. This number, any monies that were budgeted and not spent, right, get turned back to undesignated fund balance, thus generating another big building block of undesignated fund balance and free cash. So, a very important question most often when we're looking at these, and if we have an issue with the proof, when we talk about the proof, this is the first number I'll look at to see where it is in relation to last year, and if it's no, if it's close. If not, we will, ask you oftentimes for your budget to actual revenue and expenditure reports, and we will take a look at that expenditure report and see if we can, back out and tie into this number. Next question, next page, Jared.
All right, I'm jumping in here. So this question here is probably the one that has the most amount of errors on it, or at least that's how I find it. I don't know about the other two, but this is asking, you had your free cash certified the previous year, and this is asking where did it go, or what do you have left? And the form is broken out into the top part here, A and B, is any votes you had from the previous year's free cash, the free cash that expired on June 30. So it's no longer a live free cash that you're drawing from. And anything on the left-hand side, you guys still hearing me? My
Yes,
you
we're
still
hearing
hearing
you.
me?
You're good.
All right, yeah, my Avanti just dropped. But so anything on the left-hand side here is from that was voted for the previous year. So, like I said, this free cash expired on June 30. If you voted anything for that year that ended on June 30, it goes on the left-hand side here. You can see this community, they voted something, they got it certified on August 30th of 2024. They had a fall town meeting and they voted some of that before they set their recap at a fall town meeting in November, and that money is listed here. It wasn't. It happened since free cash was set, but it went on last year's recap. They also voted some monies in May at a special town meeting they had the same night as their annual. That money was either for some capital items that they were taking care of during the year, or it was to true up some budgets or something like that. And but it was for the year that ended on June 30. So it's on the left-hand side here. They also voted quite a bit of money, $3.5 million of money that they were carrying for the next year's budget. So this is money they were going to spend. They were reserving. It's your reserve for expenditure here in section B. This is money they're going to spend in the next year. So we're going to look, and that all that money's there, and all of these numbers we will check to your recap. They should all be listed on your recap as free cash votes, but we often don't have your recap when the balance sheet comes in. As you can see from up here, this is a community that the previous year submitted on August 30th. If they submitted around a similar time in the current year, then they would not have their recap in, and we would not have nothing to compare it to. So we will go back when the recap comes in and check this. If you miss votes, if we find votes on here that aren't on the recap, we may need to recertify your free cash because it's overstated at that point. So they voted $3.5 million of free cash for the upcoming year. We then move down to section C. Section C asks, it takes that $3.5 million from above, brings it down. It also asks, did you vote any overlay surplus as a reserve for expenditure? That's the other common funding source that people may use for the upcoming year's budget. This community voted $400,000. Then the next little block here, that green area with the red print in it, asks, were there any other funding sources you used? Stabilization could possibly be used, but this is anything that was to fund the next year's budget in the general fund. So stabilization's the common one here. You may see some old articles that were that you decided to reappropriate. They had balances left in them at the end of the year. That will sometimes appear here. Most of the time, 9 out of 10 times, there'll be nothing in this box. It's almost always just free cash or overlay surplus once in a while. But those two numbers, the 3.5 of free cash and the 400,000 of overlay surplus, are what your reserve for expenditure is. That 3.9, 10689. That should be the number we see for your reserve for expenditure on the balance sheet. The number to the left of it, the 16,440,772. That's all of your free cash that you didn't spend. So this community had $24 million of free cash originally. They spent the $4 in the current year that they were in, and then $3.5 in for the next year. They appropriated that for the upcoming year, and that left them with $16,440,772. That's your start point for this year's free cash. That's the first number that's in your undesignated. That's what you had left over. And then all of these numbers we've been going through that Tom has talked about already, and Jared's going to talk about some more in a bit, those will all add to that 16 million, and that will be what you end up with for free cash this year. We're going to show you the proof at the end, and that may help with explaining where these things come and go. Do we have any questions?
Andrew,
Yep.
yeah, we got a couple of questions about the form, saying it's an old form, and why are we using the old form? Well, this is the current year form that we're in. We're still actually currently working on balance sheets for this fiscal year, so we have not created the new forms for next year. But if you want to, translate this to the future form, column A would be votes for fiscal 26. And column B would be votes for fiscal 27. So we're just flipping the year on those. Okay, but we have not created these new forms yet because
Yeah, we
we're
haven't
still
rolled the
working in the
year
current year.
'cause
Not everyone has
there
certified
are
their free
still
cash and
people
filled out
doing
their
their balance
checklist.
sheet for this year. So this is the most current year we have available. We can't roll all the forms until we get to June 30, or else it would make the current year's forms unavailable to those who have yet to complete anything. Let's see, there's a question here that said, would you include a vote to rescind free cash appropriation in 12A? If it was from the free cash that closed on June 30 and you rescinded it, then yes, you would put in a negative number there. Because you would have first put in the vote that occurred, and that would have reduced it, and then you would put the negative in and it would offset it. All right, let's go to the next question. 12B. So this is pretty much the exact same thing as 12A, except it's for your enterprise funds, for your retained earnings rather than free cash. And you'll have one of these for every enterprise fund you have. So Tom's got a community with 9 enterprise funds. You're going to have to fill out 9 of these that are going to go on. Your checklist is going to be very long. If your community has no enterprise, there'd be nothing here. You just keep moving. There'd be no 12B. If you have 1 or 2, as most places do, you'd have to do whatever amount you have. But it's the same concept. It starts with what was certified the previous year, and we want to know any activity that happened from retained earnings up to June 30. The left-hand side, again, is going to be things that happened during the year that closed out on June 30. And then the right-hand side is going to be things that are voted for the next year, for your current year's budget, the one you're living in now. So you carried this money forward to pay for some expenditures in the year that you're currently living in. That's your reserve for expenditure. In this case, if you used overlay surplus or something else for your enterprise fund budget, then that would go in the block that we talked about down there. If this is a water fund and you had a water stabilization fund and you voted some water stabilization money to cover the budget or to cover capital items that were included in your enterprise fund budget, that money would be included in that block and it would be part of your reserve for expenditures. So that 587, 387, that's the number we would expect to see in fund balance reserve for expenditures in this particular enterprise fund on the balance sheet. When we looked at the enterprise fund tab, you would have a column for each of the different enterprise funds, and this would be in the column for what's this, water sewer in this town. And again, this community, you see, they spent off almost all of their enterprise funds. They only had $602 left at the end of the year. So whatever the end of their operations were for the year would add to that, assuming they came out in the positive, hopefully. Next. Yeah,
Andrew, let me just jump in for a second. I saw something in the questions Q&A about changes to the checklist. So the checklist, we're only going to update dates on it. There'll be no new questions or anything added to the checklist for next year. So we're kind of in the middle of preparing for maybe a change to Gateway in the future. So they've limited the changes we can make, and there are no changes other than dates being proposed to the checklist for fiscal 27. Is that where we are? 77? Going to?
Budget year 27, 26
Yeah.
free cash. Yeah. So, okay.
Correct.
Is there another? Is it that we only have one in here? Or how many do we have of next slide?
I think it's just the one.
They're just the one enterprise in this one? Nope, there's another one.
No,
So
recreation.
same concept. I'm not going to walk it. The left-hand side is the year that ended June 30. The right-hand side is the year you're currently living in, the year you're operating in, and it should tie out to the balance sheet down there at the bottom, the reserve for expenditures. In this fund, they had a healthy balance of retained earnings left over at the end of the year. They only spent a couple 100,000 of the 994 that they had certified. So they're going to carry 703 into the next year. Next.
All right, thank you, Andrew. Moving on to question number 13. Report the amount of unappropriated overlay surplus closed to undesignated fund balance. So what we're looking for here, or what we're not looking for, is your total overlay balance. Some communities will put what they have in overlay in this number. That's not what we're looking for. What we're looking for on question 13 is if your community released overlay to overlay surplus, and maybe they voted some of it to be used for a capital project or something like that, but they didn't vote the entire amount that they released to overlay surplus. So that remaining amount that was unappropriated in overlay surplus, that's the figure that we want to see here. So in this particular case, this community had released some overlay to overlay surplus, and they did not appropriate $150,000 of it. So those funds that were released, they close to undesignated fund balance and become part of free cash. They do not close back to overlay. So something to keep in mind. So we're looking for overlay funds that were released to surplus that were not appropriated, and then those funds would close to undesignated. So in this case, 150,000 is closing to undesignated fund balance, and it's going to increase your community's free cash. The next question, number 14, we're looking at any Chapter 90 reimbursements. So if your community has a Chapter 90 deficit and no receipts have come in to cover that deficit, and it would be a potential hit to free cash, Chapter 90 is the only program where we'll give your community credit if you've applied for reimbursement prior to September 30th. So if you check yes on this, we want to make sure that you upload just the first page of that Chapter 90 reimbursement. We do not need all of the engineering and other documents that go along with your Chapter 90 request. We just want to see that first page that shows the amount that you're requesting, how much you've spent, and the signatures of the department that's doing it. So we're going to check the date to make sure that it was submitted before, signed before September 30th. And that way there we can give you credit and not reduce your free cash. Because if you check no on this checklist question and you have a deficit in your Chapter 90, the field reps are not going to reach out to you and ask you, do you have you requested this? They're going to assume that you did not request it. They're going to reduce your free cash. You know, we prefer that you make sure you answer this question correctly, so that if you do have some reimbursements and you upload that information, we can see that and we'll give you credit for it. What we don't want to happen is that you answer no, we reduce your free cash, and then you reach back out to us and say, oh, I forgot, here as it is. We prefer not to have to go back and recertify your free cash. So if you can make sure you upload that information, that would be great.
Jared, 1 second.
Jared, can I just jump in?
We have a question for pertaining to 13. For 13, you report all overlay surplus or only overlay surplus that was appropriated but unused?
All right, so good question. So let's say, for example, your community releases $300,000 of overlay to overlay surplus. And let's say town meeting then votes to appropriate $150,000 of overlay surplus to reconstruct and renovate a playground in your community. $150 was appropriated and is going to be spent on that playground. And this other $150 that was released to overlay but not appropriated at town meeting, that's the amount that's going to be reported on the checklist, and that's the amount that will flow back to undesignated fund balance.
So it's the overlay surplus that was released but not appropriated. If it's appropriated, you don't put it on this question. I think in this example, the community used $400,000 of overlay surplus to go towards the fiscal 26 budget, the next year's budget. That was in reserve for expenditure on the previous, I think, question 12A. So they had 400,000 that they appropriated. They had an additional 150 here that they closed out. So the assumption is that 550,000 is the amount of overlay surplus that got released by the assessors. Okay,
Yes.
400 was appropriated in the budget, reported in question 12, and now what's remaining? There's 150,000 that did not get appropriated. It's that amount that did not get appropriated that's going to close the fund balance that's going to go on question 13.
Yes, there was at least 550 appropriated. There could have been more and voted to current year expenses, something like Jared had used as an example. That would be on the B2 of the recap if you did that. The other thing is if you sometimes places will release overlay surplus and vote none of it. In that case, you put the full amount here. It's all closing to undesignated. Some places will release overlay surplus late in the year when you can't have a town meeting just so that it flows to free cash.
Can we just jump back? We'll jump back to question 14 on the chapter 90. This is the only spot on this checklist that if you click yes, you must put an upload in to be able to submit the form. So if you click yes on this and don't have an upload, you're not going to get the submit button when you get to the end of the checklist. So remember, if you have chapter 90 and we ask you have supporting information, you need to upload that Mass Highway cover sheet with the signatures. Upload that right here to the checklist. Once the form sees the upload and you finish answering the other questions, you'll be able to submit. But we do get several questions annually when someone will click that button and not realize they forgot to put the upload in and they can't submit the form.
We had a request to go back and do 11 again. Why don't we finish this and then we'll swing
Yeah,
back
and go back to 11 at the end.
and
Good
do the
idea.
whole thing to do all
Yeah.
of 11 again. Go ahead, Jared. Sorry to
All right,
interrupt.
checklist number 15. This is asking if your city or town is self-insured for employees and retirees related to health insurance. So if your community is self-insured, it has the liability on itself, you would check yes. There's not many communities in the Commonwealth that are self-insured. I think it's under
It's
30,
around-
yeah.
Yeah, it's around 20-ish. The key
Yeah.
word there is self. If you're in an insurance plan with somebody else, it's not self. If you have anyone else involved, the group of you may be self-insured, taking on the same thing as a self. But if there's someone else involved, so if it's, I have a couple towns that it's the town and the regional school district are in a health insurance trust together, and they've taken on all the risk there. But because there's somebody else with them, it is not self-insured. They're in the next question. Not the next one here. They're the one about the group. But go ahead, Jared.
And so for 15, if your community is not self-insured, you're going to answer no. If you are self-insured, you would answer yes. In part B, is there a self-insurance plan for fiscal 25? So part A is asking, are you going to be self-insured in 26? For the upcoming year. Part B is, were you self-insured for FY 25? And if you answer yes for that, then you're to enter the deductible for the stop loss policy, if you have a policy, the total claims paid, as well as the IBNR, the incurred but not reported claims that are still out there from May and June that haven't come in. Question number 16. This is talking about whether or not your community is self-insured for something else. For example, if you're self-insured for dental or for workers' compensation or optical. So your health insurance may not be self-insured, but you may have a self-insurance plan for something else. So that's what question 16 is looking for. If you are taking on that liability, that responsibility on your own, and as Andrew mentioned, you're doing it by yourself. You're not part of a group. You would answer yes if you are self-insured and no if not. If you do happen to answer yes for this, please fill out the description as to what you're self-insured for, whether it's workers' comp or optical. And it also asks questions for A and B as well, similar to question 15. So 16A would be, is there a self-insurance plan for fiscal 26? That would be the upcoming fiscal year in the case of this balance sheet. And part B is, were you self-insured in the current fiscal year for this, which was fiscal 25? And if that was yes, then you would go on and fill out the deductible for the stop loss policy, the total claims paid, as well as the IBNR, the incurred but not reported. Question 17.
Hold on, Jared, 1 second. We got a question popped in. Would you
All right.
consider Maya or any type of insurance collaborative to be self-insured?
So no.
No. So
No,
no.
that's not just you. You're involved with a big
You're in-
group.
You're
No,
involved in a group, exactly. So no.
So for question 15, you'd be answering no in that particular example. And when we jump to question 17, as you can see right here, this is asking, are you a member of a regional or county self-insurance plan? So if you're not self-insured, but you do have health insurance and you offer health insurance to employees, then you should be answering yes to question 17. And as you can see here, they put the group name of Meyer Health Trust, and they put the person's name and their contact. So this is question 17. So if question 15 is no for your health insurance, question 17 should be yes, unless you're not offering insurance at all to any of your employees. Question 18 is just asking, will your community have an audit in fiscal year 2025? If you choose yes, please fill out the description of the company that you're using. If you choose no, then you can leave that blank. Question 19 is asking what your accounting software is. So if you do choose yes, that you do have an accounting software, which almost all communities have, you can go ahead and just put that in there, whether it's Munis or Vadar or SoftWrite. Question number 20, does your community use a payroll vendor? So if it's no, make sure you just check the radio button no, and you can leave the description blank. If your community does have a vendor, go ahead and hit yes. One of the most common ones that we see is Harper's. So you could just type Harper's into the description there. At the bottom, as Tom mentioned, if on the question for chapter 90, you do choose yes and you have some reimbursements, this bottom section is where you want to go ahead and upload those requests for reimbursement for your chapter 90. Tom, were there any other questions that we wanted to
do you want to
answer?
swing back to 11? I don't know who's driving here. Yeah, go back to 11 and one of you, I can do it, whoever can do it.
To report all the unencumbered, unexpended appropriation balances, those are your appropriation turnbacks. So you want to look at your budget to actual expenditure report, your year-to-date budget report, whatever you call it, whatever you use. You want to look at that and see what monies were appropriated in the budget and were not spent. So all of the positive amounts, sorry, Andrew.
Or encumbered, not spent
or encumbered. Thank you. Or encumbered or expended, correct. Unencumbered, unexpended balances. So any amounts that are positive amounts coming back at the end of the budget year that were not spent would be flowing to undesignated fund balance and increasing your free cash, being a building block of your free cash.
Any other questions in there?
Not at the moment. Go ahead.
All right, so we wrapped up the checklist. Now we're going to take a quick look at the free cash proof. So this free cash proof is something that's completed by your field advisor, and a lot of communities don't even see it. You know, if we cannot prove out your free cash, there's a good chance that your field rep may send this to you and be asking questions. But just to kind of go through it really quick, we're looking at the very first cell, we're looking at your prior free cash certification. The second cell, we're looking at the current year's certification that we want to certify based on the balance sheet that was submitted. In this particular case, it was 22 million. And then we want to prove out your free cash between 85% and 115%. And as Andrew and Tom had talked about earlier in the checklist, we're taking the figures that are closing back to undesignated fund balance to prove out your free cash. So in the case of this particular community, for their question 6, their local receipts, as Tom mentioned, they had $2.9 million in actual receipts above the budgeted amount. So that 2.9 is going to be closing right to undesignated fund balance and become part of your free cash. They had no other general fund revenue that closed out that they reported. In the next part of the proof, this is question 8. This is for your cherry sheets. So they received $30,000 more in actual cherry sheets than what was estimated. So that amounts are going to close to undesignated fund balance and become part of free cash. Question 11, as we just discussed, were your appropriation turnbacks. So those were appropriations that were made, but then not all of those appropriations were spent. So for this particular community, there was $1.8 million in appropriations that were unspent and unencumbered. So it's going to close back to undesignated fund balance and become part of your free cash. And the big driver for this particular community of free cash is this question number 12, as Andrew talked about. They had over $16 million of certified free cash that they did not appropriate. So that money is going to flow back to undesignated fund balance and become part of free cash. The next question was 13, and that was about the overlay surplus that was not appropriated or encumbered. In this particular case, they had $150,000 that flowed back to undesignated fund balance and is going to bump up their free cash. The next piece of the proof, we look at your prior year receivables and your current year receivables. And in this particular community, you can see in the prior year, they had 2.7 million of outstanding receivables. And in the current year, they had 2.5 million. So they collected more revenue in the current year over the past year. So that's a positive impact to undesignated fund balance and free cash. The next piece we look at are adjustments to free cash. We look at the prior year hits to free cash, and that was 216,000 to the current year, which was 188,000. So their adjustments to free cash or their free cash reductions were less in the current year. So that's a positive impact to our proof, and it's a positive impact to free cash. Next, we have some other adjustments. As Tom mentioned in question number 9, those were your other financing sources. In this particular community, there were $253,000 that was not voted or budgeted that flowed back to the general fund and is going to become part of your free cash. So here, there's 21 million is what we could identify based on your free cash based on your checklist. And that falls to within 97% of what we're looking for. So in this particular case, we were able to prove out the free cash that we wanted to certify to 97%. So in this case, everything flowed well, everything looks good. So there would be no questions based on not being able to prove out your free cash. At this time, if you have any additional questions, we're happy to
we have
answer
one
those.
question that someone asked when we were explaining the turnbacks. They asked if that was for all funds or just the general fund. It's just the general fund for the turnbacks.
So when you think of the checklist, think of it as general fund, because we're trying to prove out your general fund, free cash that we're certifying from your general fund undesignated fund balance. That's it.
Any other questions? If not, we're done.
Last call for questions. If anyone wants to put them in there right now so they could take them. If not, you can you'll receive an email from me with a recording, the presentation, and a survey. So you'll probably get that sometime next week. We'll also be posting the webinar to the YouTube channel. So if you want to access it there, but you'll have the ability to reference this. We appreciate your time. Thank you, Andrew, Jared, and Tom. All right.
Very welcome.
Have a good one.
Yep. Have a good
Great
day.
day, everyone.
Bye.
Yeah, thank you.